Yo, what's going on, everybody? It is Thursday, May 22nd. Markets were flat. Actually, markets were up most of the day. Dow was up. And then late, right before the close, it came down. I don't know what came out. So maybe somebody said something, maybe whatever. I don't know. All I know is that it gave up its gains. No big deal. Yesterday, we had a Social Security payment. I've been covering this whole phenomenon we've been seeing since the debt ceiling has been in force. These days when we have these big reserve additions, like yesterday, we had like a 54 billion leading flow. We had like a 30 something billion net flow from the Social Security payment. They're a little bit destabilizing because, like I said, the system has to digest that. And I think once we get the debt ceiling lifted, I think that problem goes away. All right. The other news today was the House passed the big, beautiful bill, Trump's big, beautiful bill. And that went to the Senate. So the Senate's going to make whatever changes it needs to make. And we're getting very close to that being finalized. Now, a lot of trading, a lot of positioning in the recent weeks has been on the basis of this bill. I mean, that's been the headlines. And I assume that there are lots and lots of people out there who trade or invest off of the headlines. I talk about this all the time, headline traders. Now, me, I don't do anything. I don't know what's in this bill, okay? They're talking about everything that I see reported is that this is a budget buster. It's going to increase the what they call the deficit, what I call net government transfers. There's tax cuts in there and there's spending cuts in there. I don't know. I haven't read the bill. I don't think anyone who even puts this stuff together, I don't think even they have an idea. We got to see how it all pans out. And that's why I wait for the numbers. The same thing like with the tariffs and with Doge. When Doge was operating, it's still operating, I think, but when Elon Musk was out there every day talking about big spending cuts, and I told you guys, I see the numbers every day, nothing's going down. Now, that may happen in October because, for example, the government workers who took that, they had the option to quit, all right, to resign, and they would get paid through the end of September. So we might start to see that later in the year. But I told you guys, I don't react to this stuff. I wait to see the numbers. The numbers tell me what's happening. The same thing with the tariffs. When they sold this market down brutally, in late March and early April, I was saying, there's nothing happening on the tariffs. There's nothing happening. Even now, when I do see the increase in customs taxes, tariffs, it hasn't been enough to turn back or to slow down the leading spending flows. So we saw the big market recovery. And all these geniuses were like, gee, why did that happen? We were supposed to have the tariffs. That's why I say you got to wait for the numbers will tell you what's happening. And I always say, I see the numbers every single day. Nobody does what I do, where they go to the Treasury statement every day. I have the databases. I just parse out all that information. I look at it. Okay, I gave you the analogy. The doctor in the hospital making his rounds to the patients, looking at the charts. How are the vital signs? How's everything doing? How's your blood pressure? How's your heart rate? Take a blood test. So it's the same thing. I see this every day. It'll tell me. I don't need to speculate on what's in that bill. I don't know what's in that bill specifically. And again, even the people who crafted that bill, most of them don't understand economics anyway. They all think that we're out of money, the government. And so it's a ridiculous exercise unless you like gambling and just take a shot, like, oh, it's going to be this or it's going to be that. I'm going to make my bets right now. You can do that. I mean, a lot of people gamble. I prefer to wait to see what's in the numbers, and it'll tell me very clearly what's going on. So today, the 10-year yield was ended up at 3 base. I'm going to say it like this from now on because I know everybody is hysterical out there, and we have a debt crisis going on, right? So the debt crisis we're 3 basis points above the Fed's range. Okay, the Fed's target range is on its policy is 4.25 to 4.5. It says it's going to stay there for a length of time. Sorry. And we're at 453 on the 10-year. So the debt crisis, an update, news flash. The debt crisis, we are 3 basis points above the Fed's target rate. Okay, I'm not making that up. That's what it is. That's the debt crisis that you see plastered all over the place. The bond market is collapsing. It's a failure of everything. Every, hyperbolic word, description that you could come up with, we see it every day. It's the crisis. What's the crisis of the day, right? Like you go in a menu, what's the soup of the day? What's the crisis of the day? Either the dollar is collapsing, it's at 100. It's been like the dollar index been like 99, 98, 100 for a while now. With all this hysteria, and again, I did that thing the other day where I went back years, decades, and I showed you it's basically where it was in 1972. So so that's the crisis of the day, is that the 10-year yield is 3 basis points above the Fed's range. We had it back in March where it was 50 basis points below the Fed's range. And they even made that into a crisis. They didn't say, oh, look how good this is that everybody's buying bonds and foreigners are buying bonds and the yields are coming down. No, it was like the yields are coming down because, doom is going to descend down upon us. Recession, depression, every single time it's something negative. Every time. I once saw some psychological study that said most people's thoughts are negative. 80% of people's thoughts are negative. I don't know if that's true, but that supposedly was a psychological study. And I, as somebody who has been in the markets for a long time, as somebody who does my videos, and I talk to people and I have subscribers, not that my subscribers are negative, they're not. I think because they're informed, they're educated. But I see it though, and I see it in the, at least in my area of what I do in the financial world, in the financial realm, everything is negative. And even if it's positive, it's portrayed negative, like a bubble. If something's doing well and if it's going up, then how do they portray that? It's a bubble. And not just the media, the so-called experts. It's a bubble. It's overvalued. It's hyped. The only thing they don't do that with is gold. Gold could keep going up and up and up. And it's yeah, that's how it's supposed to be. Never mind the fact that every single ounce of gold ever mined or discovered in this world, in the earth, is still in existence. Gold is not like petroleum that you burn it and it goes away. You don't have it anymore. It's finite. Every single ounce of gold since the beginning of time that we have pulled out of the earth is still around somewhere. You can't destroy it. Okay, you can melt it down. You could change its form. You could stick it in a vault somewhere. You could wear it around your wrist. But I mean, it's still around. Okay? So, but that's the only one that I've seen where it's never portrayed in a negative. Interesting, right? I mean, that thought just came to me right now, which is I find it to be interesting. So yeah, the crisis of the day is the 10-year yield is 3 basis points above the Fed's policy range. Remember, 4.25 to 4.5. And oh, by the way, I should mention that I look, every Wednesday, every Thursday, I update we get that weekly American Association of Individual Investors sentiment survey that comes out. We had a positive week. They flipped positive for the first time in I don't remember. It was maybe 4 months or something like that. This was the first positive weekly reading. So individual investors who were super bearish at the bottom in early April, makes sense, right? This is a contrary indicator. And people panicked. They saw the market going down. That's when you should have been greedy and buying like crazy, which I was adding to my portfolio. That's why when the thing came back, my portfolio went to a new all-time high. So they were super bearish. Now they're bullish. Not hugely bullish, but they went 4 months negative, and now they flipped bullish. So, I mean, that, if you take that as a contrary indicator, it looks like we could have some more backing off in the market right now until they flip back to being bearish. I don't see anything in the flows right now. And again, I look at this every single day. I mean, they're just it's a steady uptrend in leading flows. The only thing I do see is net government transfers. That is shrinking year over year, okay? It's still above last year, but that gap has been steadily narrowing. So the level in the pool, the swimming pool, is coming down a little bit. And you got to keep an eye on that. Got to keep an eye on that. That doesn't represent, I don't think that represents anything imminent in terms of an impact to the economy or the market. But if that trend continues, that's a drainage. That's a drainage. What is that? That represents the stock of dollar-denominated financial assets in the non-government. It's what they hold. It's their stock. It's their inventory. It's like the level. It's like the amount of water in the pool. All right. So, I mean, I don't update that every day. I update that every week on Friday or Saturday when I compile my report. So I'll take a look at that tomorrow. Anyway, that's it for today, folks. Please like and subscribe. I said yesterday, suddenly the number of subscribers shot up. I'm getting close to that 10,000 subscribers, which I think is pretty good for this little channel. Nobody pays any attention. I'm not a big MMT academic who's out there on TV. I used to be on TV, but I don't do podcasts. I don't do interviews. I'm not out on TV. I do this. So it's all thanks to you guys. So thank you very much. Anyway, that's it for today. See you tomorrow. Bye.